Hello everyone, I'm Marty and welcome to my September 2025 real estate market update for Greater Vancouver. It's been a pretty mild summer, July and August. We're going to see August, a lot of people are away, it's pretty quiet. We've seen that market settle down over August. And the stats will verify all of that, but let's run through them so we can bring you up to date on what's happened this past month. One thing that I will point out, you know you've made it when they actually release a beer with your name on it. I'm very excited. A client brought this to my attention. It's Marty Time by Mac and Jack's Brewing. I was pretty excited to see that. Wanted to share that with you. I'm gonna have to pick up some of that lager and try that beer out. It better be good. And let's jump right into that market update, you guys, for September. Let's see the latest stats that took place over the last month. More or less, the summary note is prices have stabilized. We've seen some softening in some product, pretty expected to happen over August. With a lot of those buyers being out of town, not purchasing, a lot of sellers just not being on the market. But year over year sales activity compared to last August for detached houses, Greater Vancouver was up 13%. Prices down about 4.8% from this time last year, Greater Vancouver houses. And last month, a drop in pricing of about 1.2%, again expected over August. Attached townhomes and half duplexes, activity up 10.5% from this time last year. Prices down year over year for townhomes, half duplexes, 3.5%, and a slight drop last month of 1.8%. For apartment condos, activity is down year over year from this time last year of 5.5%. Benchmark prices down 4.4%. And last month we had a drop in pricing of 1.3%. Again, pretty typical for that slow month of the summer. What's hot and what's not? Here is, thank goodness we got the right market speedo on this month. God forbid that would happen again, what happened last month. But the market speedo shows overall in Metro Vancouver, listings are up. 8,122 listings, sales 987 last month, again relatively quiet for an August, and sale prices down about 6% year over year comparison for all of those stats. Overall, the market is at a 12% sales ratio, so just inside that balanced market territory. Here's the breakdown. Anything less than 11% in the sales ratio, or in other words, the absorption rate of product into the market on a monthly basis is a buyer's market. If we're between 12 and 20% selling in that month, it's a balanced market. It's not favoring the buyers or the sellers. And when we get into those super hot markets, that sales ratio can jump above 21%. We got upward pressure on pricing, multiple offers, etc. happening. And it's really interesting, depending on the product and the neighborhood, we are still seeing that in certain segments. So let's break it down. Detached houses, Vancouver West Side. Here's the breakdown since December of last year. You can see we've been hovering in that buyer's market territory throughout the year. And last month we were at 8%. The stats for this month still at 8% over August. That is still in that buyer's market territory for detached houses West Side over August. Now, if we go into condos and townhomes West Side, you can see we've been in high balanced market territory throughout the year. Let's bring up last month. We're at 18%. We actually have an increase of 1% sales ratio and activity for condos and townhomes on the West Side. And that brings us into, of course, still balanced market territory until we hit that 21%. Now, let's look at downtown. I separate that out. Downtown, a little slower in terms of activity throughout the year, just into that balanced market territory, upper end of buyer's market territory at 11%. throughout most of the year downtown. We are still at 11% sales ratio, again, right at the upper end of that buyer's market plateau. Condos, townhomes downtown. Let's go into the east side, detached houses. What's happening over there? As you remember last year, we were right at the top of that buyer's market territory, except for the beginning of the year. And July was pretty busy and balanced. August was 9%, it slowed down. And as we look at the stats from last month, we're at 10%. So a slight uptick in activity over the last month at 10%, but still in buyer's market territory for houses on the east side. Condos and townhomes east side, that was the most active product category we had throughout the year. You can see jumping well into that seller's market territory several times throughout the year, and then dropping down into very high balanced, ending up with 20% last month. I think we had a drop in activity. Yes, we're down at 16% sales ratio over the past month, again in balanced market territory for condos, townhomes, east side. If we look at overall across BC, here's that balanced market band. You can see most product is in there, but we're seeing that relative increase from the beginning of the year throughout the province. Okay, what does this mean actually with prices, and where are prices going to be going? If we look at the past couple of years from the average price graph for Greater Vancouver, you can see here's where we are now, here's where we were at the peak. We're about a 10% drop for houses. Townhomes, a little bit less of a drop, and condos have been pretty consistent, slight drops in that product. But overall, if we look at all of the Greater Vancouver product bunched together in all the neighborhoods, we're down between 5 and 10% from that peak we had in spring of 2024, okay? So when you look at your assessed values, that's of last year, 2024 assessed, the new ones are rolling out now, you'll see the market was from the data from last spring about 10% higher than where we are now. If we look at the 5-year trend, same deal, townhomes, houses, condos, 5 to 10% drop from these peaks we had, where we are now sitting in the end of summer. Now, what's happening in the Burbs? Pretty quiet over the last month. Again, as I said, the only uptick in activity was the west side, the east side. These are for houses, of course, detached monthly variances. Increase in activity in both of those. Richmond, Port Moody, Surrey, Maple Ridge, and Mission were the only areas we saw a slight increase in activity for detached houses. Attached monthly variances, you can see only 3 areas increased in activity: downtown Vancouver, and of course Tawasin. And we've got just south of us here a little bit of activity. The rest of the lower mainland, drop in activity. Again, many people being away, not much going on over the holiday month of August. So residential prices, if we seasonally adjust across the province, here's our post-COVID peak. Here's where we are today. Again, we're about 10%, give or take, down from that peak. So what's going to happen this fall? Very good question. Let's look at our market drivers and what I'm following. Number one is a market deterrent in red is that consumer confidence. Everyone is still looking at that uncertainty, the political turmoil coming out of south of the border. That's making people a little uncomfortable. What's going to happen with our economy if this doesn't get settled out? So there's a lot of waiting for some buyers taking place. That's probably our biggest detriment to the market right now, because inflation is doing well. We're at 1.7%. Our economy is doing well. You'll see the GDP slide coming up. The cost of borrowing is pretty good. Our 5-year fixed rate, you're around 4%, which is not bad, and it's holding pretty steady. And we're going to see some slight drops coming up in both of those lending rates as things unfold. The inventory levels, they've been pretty relaxed over the summer, not a lot of people listing, of course, and that's stabilizing the pricing. We don't want any dramatic increases in inventory because that could negatively affect the prices. So we got a lot of good going on in green. We got a little bit of consumer uncertainty taking place, and of course that's affecting our overall market activity. So the buyers are thinking things through. There are many people taking advantage of the nice market we're in now, and there's many still waiting to do that upgrade or downsize for when that market picks up again. Okay, so let's look at the consumer confidence. Let's look at the unemployment rates. Canada-wide, 6.9%. BC, 5.9% unemployment. No dramatic changes there. If we look at retail sales, those, of course, have taken off. There's a lot of activity in retail sales throughout the province. Here's where we're getting a lot of that activity. Sporting goods, health and personal care, general merchandise, food, of course, increased activity and spending, building materials, really big this year, and motor vehicles and parts, etc. So we're seeing a lot of activity, people are spending, and the GDP is doing relatively well. It's kind of plateaued a little bit, but it certainly isn't doing what it did back in COVID times. We're seeing good growth there. So the economy is doing well. And again, that's related to that Bank of Canada overnight rate as well. Across BC, if we look at number of unit sales, since early in the year, we've seen a real sharp increase across the province of product selling. So we're seeing throughout the rest of the province dramatic activity in sales volume. If we look at rental costs, we've seen a slight drop from $3.01 a square foot to $2.96. Here's this year's rental rate, rental trend. Here's last year's. So the rents have come down a little bit from last year, so that's making the rental a little bit more affordable. The commercial real estate, the commercial leading indicator, you can see has taken off just in the last couple of months. There's a lot of activity happening with commercial real estate, so that's good news. Again, going back to inflation, there's Tiff Macklem. Inflation's at 1.7%, and that's really good. It was the same as last month. Not a lot of change there. The economy's doing well, so why change that overnight target rate? Of course, they won't unless they have reason to, and it's at 2.75%. And they don't want to push up inflation through the monetary policy. They want to keep it between that 2 and 3%, and that leaves the door open for more cuts down the road when they're needed. So that's what's happening there. If we look at the inflation graph, of course, there's the crazy inflation we had up to 8%. A couple years back, and then we're at 1% now, 1.7%. We're just below, I call that the Bank of Canada happiness band, between 2 and 3%. That's where Tiff Macklem would like to keep that inflation rate, and we're below that, so we even have a little bit of room to play should it be needed. And of course, gasoline has come down significantly. That's made a big difference. A lot of the other costs have come up, but that was the big driver in keeping that inflation, our consumer price index, down. So let's pop into how do we compare to our neighbors. Of course, the inflation 1.7 here to 2.7 in the US. That was the same as last month and same as last month. The target rate at 2.75 and the overnight target rate in the US, 4.33. Not a lot of change going on with the rates. I know they're under a lot of pressure, the Fed, to lower the rates, but we haven't seen any major changes taking place yet. Now, cost of borrowing, yes, we're going to see some slight drops. If we're looking at the forecast for the variable rate, we could expect some drops into next year. The fixed rate, maybe some slight drops. So that's going to help us when that market does start to heat up again. The buying power for today's cats, same as last month. I'm using 3.99% for 25-year amortization. Costs about $527 per 100K borrowed, $5,270 per million. Doing some quick calcs when we're out there looking at property. Same again for most of the last few months. Inventory levels, holding pretty steady, and in some cases even dropping. If we look at West Side houses, you can see over the last months, typically over summer, we're not seeing a lot of change. In fact, a decrease in the number of units for sale. West Side houses, we're seeing the same trend for attached condos, West Side. That's typical again for the summer. We'll see September jump up again. East Side, same idea. We drop down number of houses for sale in the East Side, and East Side attached, same deal. Inventory dropping, again, pretty typical for the summer. If we look at active listings across BC, again, throughout the province, we're seeing a lot of activity with inventory increasing, sales increasing, and it's going to hit the higher end markets here in Vancouver relatively soon. So what's next for pricing? Here's a really interesting graph that I keep updated. I know it's a bit of mishmash of 7 years there now, but if you go back to the COVID year here, that is this dark pink one. You can see in 2020, annual sales activity. So number of sales, that's in March when the province was shut down. You can see how activity dropped and slowly built back. And of course, you can see 2021 was a very busy year, great activity in spring and a little blip in fall. That's a typical annual sales cycle that we see. 2025 is here, this pink line. Now, what do you notice about this line? It's pretty consistent around 2,000 units selling every month, and a dip in August as we just went through with these stats I'm covering. But the reason I'm bringing this graph up is you can see here's the typical demand that we see throughout a year, and here's where we are now. And that's what leads me to believe we've got a fair amount of pent-up demand sitting there just waiting to bust loose when the market is more amenable for people to get their homes in the market. More buyers are comfortable coming back in buying, and when that happens, we're going to see that activity shoot up dramatically. So pent-up demand is a big thing that I like to watch because it is an important factor. People need to get that larger home. They're having babies. Others are downsizing. They don't want to wait any longer. They want to sell that big home. They want to go to that retirement condo, and they want to move on with their lives. And that demand has been building up over that slower period, and that will come out. So in conclusion, of course, we're watching the market, mortgage rates, the inventory, consumer demand. Bank of Canada is holding for now. I'm anticipating not a drop at the end of September, but they are leaving room for more drops in the future. Inventory levels have relaxed over the summer. That's typical. We normally see that. We're seeing a lot of buyers who are still uncertain about investing money in real estate now until this whole political uncertainty disappears. Many are waiting for completely blue skies before jumping back into the market, but also many buyers, and we've been busy all year. We had a record months, June, July, August for summer months, incredible activity because a lot of people are taking advantage of the current market. You can go see property, you can write an offer, you can have your subjects, take your time, make sure you do your due diligence. It's a great time to buy. It's some very good value. And in the right price product and well-marketed product, we're getting multiple offers and great prices for the sellers. So it's a good market to take advantage of, and it's a little bit more relaxed than buying or selling in a heated market. Inflation remains low with room to move, and we have a high pent-up demand. That's really important in our market. So prices have relaxed over the summer and will continue as that uncertainty lingers, but we are seeing a lot of people listing now in early September, expecting that increase in activity for the September-October months this year. So there is that happening at the same time for that annual cycle. That's my market update, and I hope you enjoyed that. My videos on YouTube, Instagram, and Facebook. And if you'd like to listen on YouTube Music, Apple Podcasts, or Spotify, I'm on there as well. I'm Marty Pospisil, and I really appreciate you joining me here. We've had a great summer. I hope all of you have enjoyed your summer. September looks like it's going to be a great month. The water temperature is still at 19 degrees. wow, that's like June, July temperatures. And as soon as this haze disappears, we're going to get some clear skies again. There's a lot of fires going on. Hopefully we'll get some rain to put those out. But it's been a fantastic summer weather-wise, and I hope you enjoyed it. Welcome back, and again, I will keep you updated. I'll see you in a month for our October update. Take care.